Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by FortuneBuilders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. FortuneBuilders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to FortuneBuildersShow.com to register. Again, that's FortuneBuildersShow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you. Those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the Fortune Builders Real Estate Investing Show.
Hey everyone, welcome to this week's episode of the Fortune Builders Real Estate Investing Show. I am your host, Jeff Rakowski, and I am excited about today's episode, as always, because I'm actually going to be sharing a personal script that I've used that a coach and mentor taught me years ago on how to raise private money for real estate deals. Now, we've had a lot of people come on the show talk about, what private money is, what funding is, how much they've raised. But I've got a lot of requests just from you asking, well, exactly how do you do it? So if you're in the position to take notes, this would be an incredible episode to take some notes because I'm going to give you a formula that just flat out works. So let's get ready, but let's start with the word of the week. The word of the week this week is promissory note. And that's because we're going to be talking about raising private money. But a promissory note is one of the 4 documents that you are going to use to secure private money. A promissory note, very simply, is a promise to pay the money that you are borrowing. Now, as a real estate investor, you want that promissory note coming from your business, not from you personally. In fact, we're not going to offer a personal guarantee unless it's a deal breaker, something the lender brings up. But a promissory note is simply how much you're borrowing, your business promising to pay it back, and it's going to outline the terms, typically a interest rate based on a simple, APR, annual percentage rate. Very simple document, very easy to use, a promise from your business to pay back the money that you're borrowing. One of the 4 documents that you're going to use to secure private money. So that is the word of the week, promissory note. Let's get after it. All right, so how do we raise private money? That's what we're going to get into today. And really what I want to focus on is the actual face-to-face or Zoom-to-Zoom presentation that you are going to be giving a potential private money lender. Now, first off, before we get into that, just a couple of simple thoughts about private money. Private money is one of the most effective ways to fund your real estate investment deals. Your double close wholesale deals, your fix and flips, your buy and holds that you need to renovate before you place a tenant, before you hold. What I love about private money versus any other forms of capital, when you compare it alongside transactional lending, when you compare it alongside hard money lending, is typically you are controlling the narrative. You are basically calling the shots in the terms of the money that you're going to accept in your business. Private money is great because they can fund 100% of the money needed to do the deal. The acquisition, 100% of the rehab, 100% of the closing costs. This is how you get into deals and you set yourself up for infinite returns. If you have no money personally in the deal, your return is infinite. You got it, right? So it's something that I love for that reason. For other reasons alone, it requires no credit check. There is no financial application that you're applying. Private money lending, really another way to look at it is really relationship lending. These are people in your sphere of influence, friends, family, coworkers, people in the real estate community that you're going to build relationships with, that you are going to educate them on the concept, or maybe come across people that are already familiar with this, and you're going to present them with the opportunity. So what we're going to get into is, maybe you have an initial meeting at a RIA group. Let's, use that as an example. You get somebody's business card. Now, you follow up with that person and you schedule a time to present the opportunity to lend to your business. And really what I want to focus today's episode on is, what does that conversation look like? What are the big buckets what are the boxes you are checking? What are the things that you are saying? And how are you selling them on that opportunity? And, the one thing that I realized very quickly, and it was a pleasant surprise as a real estate investor, is you will learn very quickly is there is a lot of people out there with money that don't know what to do with it, that don't know where to put it. I get approached on a weekly basis by people. Right now, the real estate market is hot. You have a lot of people that just have equity in their homes. They're doing cash out refinances, things like that. And Jeff, I got $100,000. Can I lend it to you? Jeff, I got $500,000. What should I do with this? Jeff, I got this. Can you help me, place it over, or whatever it is? Literally constantly, to the point where I have more money being offered to me than deals to put it on, which is a good problem. And it's really a problem that you want to be in as a real estate investor. In fact, if you are doing your job right as a real estate investor, you have the education, you have the tools, you have the resources, you understand how that works. That's really the position that you should be in. But let's get into it. So you are face to face. You ask somebody, hey, I want to talk to you about an exciting opportunity to lend money on real estate. In my business, I want to sit down with you. I want to show you how it works. Now, it's always good to be having these conversations before you actually have a deal to place the money on. If you have a deal to place the money on right there and right then, you're going to bring it up to them. But you first really want to focus on the idea of starting a relationship with this person where they're going to lend money over and over and over again, on your deals. That's really the goal. So what we're after is really a business relationship, not just a one-time transaction. Some private lenders will come and go. Some will lend on one and, maybe want to go do something themselves or find something they think is a better opportunity. But many will be blown away just by the returns that you are providing and the security of it, and actually be disappointed when you pay them back, because now their money stops growing and they need you to go find another deal, or they need to find another investor or another investment to get that money working. All right, so you're face-to-face with a potential private money lender. So for the first 2 to 5 minutes of this conversation, you want to focus on rapport building. Establishing, just basically talking about friends and family, talking about common connections that you guys have had. This is the small talk that kind of goes along with any conversation that you have, but you want to make sure it's small talk with purpose. So 2 to 5 minutes. If you're sitting face to face with somebody, you have a prior experience with them, or you have maybe a mutual friend or mutual, business person that has introduced you. So you want to spend a couple times talking about the common connections and really looking to establish commonality. Commonality just makes, when people feel like you are like them, they just naturally feel more comfortable, and it sets them at ease. So a good little formula to use if you really don't have any common connections, if you really don't have any extensive history together, follow the Ford system. Ask them a quick question about their family. Ask them a quick question about their occupation. Ask them a quick question about recreation. What do they do for fun? What are their hobbies? A quick question around their dreams. What are their goals for the future? And I promise you, if you ask those 4 questions, you will find things that you have in common. And maybe, you ask them about their family and they have a 13-year-old and 11-year-old daughter, and you just happen to have kids in the same age. And then you talk a little bit about school, sports, whatever it is. But you just want to take a minute, and just let them know, all right, I'm interested in who you are as a person. I'm not just here to try to get your money, right? So you're establishing these common connections, 2 to 5 minutes. You don't want to spend a lot of time here. And now you want to transition is one of the things that we love to do here in, the systems that we teach at Fortune Builders is prior to this meeting, we want to have provided the potential lender some sort of material to read up on our company, to read up on the opportunity. We like to call this, internally the private lending credibility packet. So to a prospective private lender, it's just going to be an informational packet about your business, about your lending opportunities. So a good transition, is basically just asking them if they had a few minutes to read the packet that you had sent over. So what this does, again, is it just gives you a gauge, so how in detail that you're going to have to go, into specific topics. So I like to use that as a nice little transition question. So if you're taking notes, really the big first bucket is rapport building. Very simple, 2 to 5 minutes. When you're bringing that to a close, you transition out by asking if they had the information to, ask if they had a minute to read through the information that you had sent over. Now, the second category that you're going to get into is what I like to call intent statement and agenda, where you are basically letting them know what's in it for them. So maybe it sounds something like this. Joe, I appreciate your time today. I appreciate you, just setting aside a little time, meeting me here today. And I just want you to know up front that, I'm only going to take about 30, 45 minutes of your time. And then, I'll stay around, answer whatever questions, that you have. But by the end of this meeting, I'm going to ask you a simple question. I'm going to ask you, are you in or are you out? Are you interested or are you not? Fair enough? And they're going to say absolutely yes. So why do we ask this question? So number one is we're telling them what to expect so they understand, what's coming. What are we going to go through? And then we're letting them know at the beginning that at the end of this conversation, we are asking you if you're in or if are you out. Is it a yes or is it a no? Now, this is a powerful question because when you ask somebody up front or tell somebody up front that at the end, you're going to give me a yes or a no, people want to be congruent with what they said they're going to do. So what this does is it will really eliminate the maybes, right? And, we are in sales as real estate investors, right? I mean, we're trying to close deals. We're trying to close, relationships to bring more money into our business. We're trying to, close deals with contractors. All the time we're looking to sell and to close deals. So we're after really getting to the yes or to the no quicker. Right? We don't want to waste our time in the maybes. We don't want to waste our time. And, follow-up is important. I'm not saying you can ever eliminate all follow-up. But when you tell people up front, I want a yes or a no, you're more likely to get it is, what it comes down to. Let them know what the outline of the meeting is going to be. I let them know at this point. I mean, I have my notes in front of me. And, this is something, by the way, that you shouldn't have to wing it when you're face to face. You should have a computer with you. You should have an iPad with you. I like to put together a little keynote presentation, for the investor and have it there on the desk. And I'm going through on my iPad. And those slides are basically my notes. So I know, okay, exactly. I know what I'm talking about on this slide. I know what I'm asking. I know what I'm covering. But in the intent statement, I let them know the time of the meeting. I let them know that I'm going to be, doing a quick discovery of their current investments and goals so I can understand how you're currently investing right now, just to know if I'm the best fit for you. I certainly wouldn't want to try to persuade you, out of an investment that's better than what I'm offering into mine. I'll let them know I'm going to do a quick company overview so they understand what my company is, what it's about, who I am, what I'm about. I let them know about my buying criteria, how I buy real estate, what are the margins I'm after. And really, this is meant to show them that when they lend money to me, that it's safe. It's a safe investment because I buy property right. And we know in real estate, you make your money when you buy. And as long as we buy right, then, we're going to keep people safe. I let them know that I'll answer questions. I'll let them know I'll be covering the terms of the loans that I will accept. And then I cover the documents, that they're going to need to sign, to execute it. And then, like I said at the beginning, we ask them, are they in or are they out? We go ahead and we get the commitment. And I'll also, let them know that I'm going to share with them many different ways that they can lend money to me as an investor. Things from as cash sitting in their bank, from home equity lines, from retirement accounts. A lot of the times people don't think of these things. They think, oh man, I'd love to loan money on real estate. I just don't have any cash, but they neglect to think about the big retirement account that they have, or the equity line of credit they have on their home, or whatever it may be. And these are ways that we can leverage, teach them how to leverage those funds to be an investor in our company. So let's get after it here. So we have that would be the discovery of that would be the intent statement and agenda. So you're really just giving them an overview of what's going to happen with you today. And then we're going to move on to the third bucket. So actually, let me recap here for those of you that are taking notes, because I'm a note taker myself. So I like when people communicate a certain way. So rapport building, I'd say 2 to 5 minutes you're spending on there. On the intent statement agenda that I just covered, I would also put that at about a 2 to 5 minute period, where you're just letting them know this is the length of the meeting. These are the main things that I'm going to be covering. I'm going to communicate the opportunity. You also want to let them know that you're not just here to try to get money on one deal, even though you may have a deal ready for them, but you're looking to really establish a relationship with a handful of private lenders that you could go on and do a lot of business together in the future. And then, of course, you let them know at the end, I'm going to be asking you for a yes or a no. But you'll be shocked how that simple question, how well it works. When you say it the right way, very casual. Joe, I appreciate your time today, and this is what we're going to go through. And I just want you to know at the end of our meeting, I'm going to ask you a simple question: are you in or are you out? Just so we don't waste each other's time moving forward. And I can respect you in that way. Does that sound good? They're going to say yes 99.9% of the time. And then again, you'll be more likely to get that yes or no at the end of the meeting. Now, our third bucket would be your discovery of current investment goals. This is where you are basically asking people what experience do they have around private lending? How are they currently investing their money? How much do they have available to fund the deal? Things along those lines. So this would be maybe a 5 to 7 minute category where we're spending time here. And I like to kick off this category by first asking them a question. And this question is gold. This is a question that literally Than invested, I think it was like $50,000 in a sales trainer to come out to look at our deals, to look at our processes. And he actually, he said in the beginning, you need to ask this question. You're focusing too much on telling the people how good you are, as an investor, to where we want the potential investor telling you instead how good you are. So we kick this off by saying, hey, before I understand how you're investing money right now, I'm just curious, Mr. or Mrs. Potential Investor, what interests you most about potentially loaning your money to me? Or what interests you most about investing in real estate? Now, what they're going to give you here is they're going to give you what is motivating them, what is important to them, and they may even start selling you or selling basically how good you are. And so what I mean is maybe you ask that question, what interests you most? Maybe you hear this answer, well, I just got a lot of equity in my home. I just did a cash out refinance, in my current job that I'm working at, and it's just not going to get me to my retirement goals as soon as possible. So I'm just looking to, make some extra money. Or maybe I have 2 kids to send to college. I'm not prepared to do that on my current. Or maybe I hate my job. I just want to get the heck out of there. Or maybe it's just, they're in a solid position and we have some good position, good investments going on, but I want to diversify or whatever it may be. But it's going to give you an indication on kind of what their why is, why they're sitting down with you today. If somebody's meeting you face to face, they have interest on some level and they are motivated on some level to grow their wealth. So I just want to understand, okay, what is motivating that? So throughout the conversation, I can come back to that and I could show them how this can help them with that. Or maybe I get some objections along the way and I could tie back to basically that why that they gave me and talk about how this is a solution to that. So why wouldn't you want to do that type of thing? Obviously, that's not how you communicate it, but that is the essence of it. I want to know, have they had any past experience as a private lender? If they have, that's great. They understand the process. They're going to be a little bit, easier to communicate with, or just, less time that you have to spend explaining the basics. So that'll help a lot. I also ask, have they ever lent money before in any capacity? Now, it's funny because when I'm teaching in a room of hundreds of people, I'll ask a question. I'll say, hey, raise your hand if you've ever loaned money to anybody and not gotten paid back. And probably 80% of the room raises their hand, and because a lot of times a private lender, again, these are just regular folks, that just work in different careers. So they're not experienced, in this realm. So a lot of times they're coming in thinking, oh, well, I'm interested in real estate, but I loaned Uncle Joe $50K on his hot dog stand idea and I never saw a penny of it back, right? So they may have had bad experiences loaning money, and I want to let them know that this is nothing like your uncle's hot dog stand. This is nothing like that. You're going to be secured buy real estate. You're going to get paid out on this deal before I do. You are going to be insured on this property like you own this property, et cetera, et cetera. So I just want to understand, is there any past trauma, so to speak, around lending money on real estate or lending money in general? Because if there is, I'm going to spend a little more time on the security side of things, a little more time, making them feel safe and really understanding, having them understand how, this is a safe opportunity for them. And then I want to get into, how are they currently investing their money and asking them specific questions around that, and how much money do they have to invest? I'll ask how their current investments have performed over the last year, over the last 2 years, over the last 5 years. And this when I started asking this question, it really surprised me how many people out there don't even understand how their money is growing or what kind of returns they're making. Some will know, well, I did 10% in the stock market this year, or some have no clue, or, they've just been working this job for years and years and years and cranking money into a 401k, but really don't understand, year over year what they're earning, which really surprised me. I mean, even when I was broke, I knew where all my pennies were. I knew what they were growing at, but a lot of people don't. And some people will. Some people will be dialed in, but I want to understand, how are you currently investing your money now? What are the type of returns you're getting? And again, this is so I understand, is my opportunity best for them? Because again, we're trying to sell them on an opportunity, but sales, in my opinion, is helping people understand what they want. And then if you can, helping them get it. If you're going to be offering 10% on your private lending program in your business and they're currently growing their money at 15, I'm not going to try to talk them out of that deal. That's not what is best for them. And one question that is a really good, to ask them around how much, another way of asking them, well, how much money do you have? Sometimes I don't feel awkward, but some people feel awkward asking that question, or some people feel awkward answering that question. But if you know in your marketplace that, on average, you need about $250,000 to acquire a property, renovate a property, and handle all the closing costs, then you could say, you could frame it like this: say, typically it's about 250,000, to fund an entire deal, in our program. Assuming you had interest, would you have the ability to fund an entire deal for us, or would we need to look at a different opportunity? And they may say yes, they may say no. If they say yes, at least, all right, they got 250,000 or above. They say no, they're not at that benchmark, which is fine. We could still put people in second positions and things like that, that we've talked a lot about on this show. So we're going to move into the company overview next. But before we do, just a reminder, as always, if you are looking for a coach, you are looking for a mentor, you are looking for formal training on how to become a real estate investor, Fortune Builders offers a free class every single week by one of our top trainers. Than Merrill, Nate Harris usually are one of the trainers that you're going to hear from. And you just get your free ticket by clicking below this video. If you're watching on Facebook, you're watching on YouTube, FortuneBuildersShow.com. If you're listening on audio platform, it's FortuneBuildersShow.com is the URL that gets you a free ticket. It's a one-day training on how to go from zero to making money in real estate. That's really what it's about. And they get a lot into, raising money for your deals as well. All right, so let's come back. Right now, what we looked at is we kicked it off with rapport building. We spent a couple minutes there. We went through our intent statement, our agenda, what we're going to cover. We asked some questions around, how are they currently investing their money? And now we're getting into a company overview about you and your company. Now, if you are brand new in real estate or looking to start a company, I'm going to give you some tips that really helped me when I was brand new as well. If you have experience in it, obviously you have past experience, you've closed deals, you have a track record to point to. But I'm going to focus this a little bit more on those of you listening that maybe don't have that track record. So you want to start off by giving your personal story of real estate, how you got involved in it, why it's always interested you, why you believe in the asset class of real estate so much, any past education or work experience that can translate into, running a successful business. Maybe you've been a manager, at a hospital for, a number of years, and, you've managed a team of 40 people, right? And you've had tasks and you had projects every quarter that you've successfully completed. So you have a track record of running, kind of not necessarily your own business, but managing a team and hitting goals, right? So whatever it is from your past experience, we want to leverage that. You want to just communicate your real estate education, how you've studied, how you didn't just wake up one morning and watch a YouTube video and go out there and pretend you know everything about becoming a real estate investor, right? You want to get educated. You want to get a coach. You want to get a mentor, and you want to communicate to people that you have done these things. You want to communicate how you've studied your local market, how you're a conservative investor, and then any past experience, like I said earlier, that you have. So let me just role play here, and I'll just wing something, pretending I've never done a deal before. So I'll just I'm sitting down and the name of my company is ABC LLC, and, really for the past 10 years, I've always just had a really strong interest in becoming a real estate investor. I've loved the TV shows. I've read a lot of books on how people create wealth, and it always seems to lead back, to real estate. And, and when I look at people that are where I want to be, 75% of the people in our country have become wealthy through the asset class in real estate. So I believe in the asset class. I believe in there's no greater way to create wealth than investing in real estate. So about a year ago, I started a coaching program. I got some mentors. I got some education from current real estate investors that are they've done over about 1,000 deals themselves. They're doing about 100 deals a year. And I've really began to study, their programs, their systems, and their resources, and really have that coach there, to guide me. I've also spent, equal amount of time studying the local market, understanding what is happening here in, plug in your market, wherever that may be. But one thing I want you to know is I'm going to be taking a very, very conservative approach. We are actually out there every single week making offers on properties, typically about 30 to 50% below market value. In fact, I usually have to write about 20 offers just to get one accepted. That's how conservative I am being with my offers. So I know when my offers are accepted that I'm going to be safe as a real estate investor, and anybody that invests money into my company is going to be safe as well. So those are just some points. Obviously these are things that you want to practice. You want to script out. You shouldn't be sitting in front of a potential private money lender for the very first time and saying these things for the first time. I remember when I started, as a student years ago, I scripted out this entire thing. I wrote it out, and then I recorded myself on camera saying it, and then I modified my script on paper to match the way I said it when I record it, because a lot of times you speak a little different than you write. And then I practiced it again. I had family members. Hey, will you pretend you're a private lender, and listen to this presentation? So when you go into game time, because you could be sitting across the table from a lender that, is sitting on millions and can literally give your business the jump start that you're looking for. And if we're not prepared for that opportunity, then we're not going to maximize it. And, one of the definitions to success that I love is success is when preparation meets opportunity. So you want to be prepared. Now, in the company overview, there may be some questions that are sprinkled in there by the potential lender, but I would put that also at about 5 to 7 minutes. And then my next major category of this presentation is going to be your investment buying criteria. Now, this is going to be different for all investors. Maybe you're a wholesaler, maybe you're a rehabber, maybe you do a little bit of both, maybe you buy and hold, whatever it may be. But let's just use the example of you're a rehabber, you're fixing and flipping properties. So typically you want to let them know, and you want to communicate to them as a real estate investor. The most important thing as a real estate investor to be successful is that you understand how to buy properties right. Now, as a real estate investor, let me take a time out here. The two most important numbers that you need to be confident in anytime you're making an offer on a piece of real estate is the after repair value, also known as the ARV, and the repair cost. The after repair value is after you fix this thing up, what are you going to sell it for? What is it going to be worth? That number needs to be dialed in. And then how much is it going to cost you to fix it up, right? And that's why that one-day training I talked about earlier is so powerful, because they really get into those two, spend a lot of time on building your confidence around establishing ARV and establishing a repair cost. But assuming you have the education, assuming you know how to do that stuff, you are communicating that to people. And you are communicating some of the tools and the resources and the systems that you're using to dial in that ARV, to dial in the repair costs. But you're letting them know that you are, as I mentioned a moment ago, that you're out there making offers about 30 to 50% below market value. So when your offer is accepted, let's just use simple numbers. Maybe you're making an offer on sellers are asking $200,000, and you establish that after that thing is fixed up, it's worth $300,000, and you need $60,000 to fix it up. So maybe you use an example on a $2,000 property. Give or take, I'm going to be offering around $140,000, $150,000 on that deal. If my rehab is 60, 75 grand on that deal, I'm going to be into that deal for about, 215, 220, plus the cost of the deal. So I built in a healthy spread, a healthy amount of equity, a healthy amount of profit that is a cushion. So if a private lender, let's just say they lend the whole amount, 150,000 to buy the deal, 75 to renovate the deal, 225,000, they understand that, okay, I'm in X amount, but the after repair value is much greater than I'm lending, which, people understand very quickly that that is safety, that is security for them. So it's good to have an example property, even if you've never done a deal before. Map out a deal, get pictures, of a deal, use one of a coach or a mentor, use one of, somebody that's done a deal before. Obviously give credit to them, but, show them an actual example of before. This is what the property looked before. This is what it looked after. We determined it was X amount of money. And, after it was done, this is the repairs. This is what the private money lender loaned on this deal. And this is what they made. One thing I used to do years ago in Connecticut, I would do these free Saturday sessions on how to loan from retirement accounts. And I would just market, to people. I'd get maybe just 20, 30 people in a room. And I would give a presentation on how to convert their retirement account, how to set their retirement account up in a way that they could be a private lender on real estate deals. And then I would show them at the end a deal I recently did. This is what the lender loaned me. This is how long the project took. This is what the lender made at the end of the day. And I would never ask a single person in that audience to loan money to me. But what do you think the number one question after the seminar was over that they would ask me? Hey, could I potentially loan money to you and your deals? And then you say, I don't know, let me think about it, right? Then you take the posture back there. But that is a powerful, powerful strategy. So your investment buying criteria, I would hang out here about 5 minutes or 5 to 7 minutes as well. And really, if you have pictures and you have images, it's very easy to kind of demonstrate the power of private lending and how much money there is in real estate, for them as a private lender. And then, you're not going to sit there and give this presentation from start to finish. There's going to be questions that the investor, peppers in, now and again. So some of the top questions that probably will come up by this point in the presentation is, what if something happens to you? I have to take the property back. What if you don't sell the house for what you think? That's an easy one if you told them how you buy, because if the property doesn't sell for what you think it will, you're just going to make less money as an investor. But if you bought the property right, they're still going to get paid what they were promised. And that's really what they're concerned about. What if I have to pull my money out in 3 months? That's not an ideal situation. As an investor, we could get replace them with another private lender, but that's really the last thing you want to be focused on in the middle of the deal. So if somebody has concerns, I may need my money back in less than 6 months, and I'm looking, to renovate a house, I'm probably not going to do business with that person, just because I want, and that also tells me that maybe they don't have a whole lot of money available, and they're depending on this for some sort of livelihood issue, and that's really just not a situation that I want to be involved with. I'm looking for people that can put the money out for 6 months to 12 months, comfortably, and there's no issues around that. Why isn't everyone investing this way? That's a question that, in some way, shape, or form, I get a lot. And, and I just say this, I'll tell you exactly what I say. I just say, in the beginning, Joe, I asked myself the same question, then as I began really educating myself as a real estate investor and learning, I just began to realize that we are not taught financial education very well in this country. In fact, I think back to my experience as a student in grammar school and high school and college, I was really just taught just to work hard in school, get good grades, and get a good paying job, and to save my money and hold on to it and hope I have enough to retire. But when I began studying, the wealthy, 10% in this country, and learning from people that are out there doing this stuff, I really realized it is a small portion of our country, but I want to model myself after people that are where I want to be, not, in the same position, I am. So I began to realize that the most successful people are investing this way. But as a country as a whole, we're not really, being taught this. So, I had two choices, just stay on the path that I've been taught and, work for somebody else for the next 40 years and hope at the end I have enough to retire, or take control of my financial future, learn how the successful people are doing it and implementing that. But typically that'll resonate with somebody because they're probably coming to you for this opportunity because, you know, they're looking to grow their money faster and they're looking for new ways of doing it. And this will resonate with them. You want to get into the terms and the conditions of the loans. Typically, as a private, lender, as an investor, you want to pay out anywhere between maybe 7 to 12% to a private lender, and that's going to be for you to determine. What I do and what CT Homes do. We offer 10%, no points. 10%, no points. That's our program. Take it or leave it. So that's something for you to establish. You talk to them about, are you paying them monthly, or are all payments rolled to the end of the deal? Typically, if you're in the position to pay monthly, it's a great thing to do because then people are getting instantaneous results. They're seeing they lend you this money on a monthly basis. They're getting an interest check. They're getting a payment. I didn't do that for many years in the beginning because I wanted to conserve cash flow. So typically the interest would accrue, and it's simple interest. It's interest only loans, simple interest calculated on an annual percentage rate. So if you're paying out, somebody loans you $100,000, at 12%, you're paying out, what is that, $1,000 a month or what in interest, whatever it is. So you can pay that out monthly, or you just let that accrue. And then when the loan closes, they are paid from the proceeds of the sale. And that's typically how you want to do it, especially as a newer investor. Length of the loan, typically, unless it's something, obviously we're in a hot market right now. Maybe you got a simple cosmetic reno that's, going to take you 2 to 3 weeks, 30 days to get it ready for market. Then I'd probably do a 6-month loan. But if it's a typical renovation, 60 to 100 grand in renovation, that's going to take you 2-3 months to do that, then maybe 30 days to conservatively to get a buyer, and then 30 days to close. So it's going to be cutting it close around 6 months. I would just do a 12-month note. So you don't have to worry about redoing paperwork in the midst of the deal. But, if you close at the 7-month mark, they're paid for 7 months of, interest, 9 months, etc. So you talk about these things. And again, this is your program, so you set it up. It's not necessarily, I don't want to get into negotiating with people around this stuff. This is the way we do it. It's, you like the opportunity or you don't. And then I want to take a few minutes to walk them through the documents and how they are protected. So our word of the week this week was promissory note. That is one of the documents. That is a promise to pay from your company to them that plugs in the interest rate, etc., the terms and the conditions that we just spoke about. The second document is the mortgage deed or a deed of trust. Really the same thing, just depending on what state you're doing business in, they call it one or the other. And this is just like if you bought your own home and U.S. Bank or Wells Fargo funded that loan, they get a deed of trust, and that gives them their mortgage position on title of the property that gives them security. So basically, we are providing to them, just like they're Wells Fargo, just like their U.S. Bank, they're getting that deed of trust that is giving them, if they loaned the entire amount of the deal, $250,000, they're getting a first position lien on that property, meaning when that property is sold, the first $250,000 plus agreed upon interest is getting paid back to that investor. Number 3, you want a hazard insurance policy, listing them as a loss payee. So whoever loans you money, the banks, they're going to be listed as an additional insured by your insurance company. So that's another layer of protection. So those are really the three main documents that you need to provide. A fourth that may come up periodically is the investor might want a personal guarantee from you. Well, I appreciate the promissory note from your business, but I want a personal guarantee from you. Not something I'm going to offer, not something I'm going to bring up, but hey, if push comes to shove, I'll sign a personal guarantee, because you should never borrow money that you don't intend on paying back. So those are the quick thoughts there on the document and the protection. And then from there, if you have a specific deal that you need funding on now, I would bring that specific deal to them. You'll answer questions along the way. And then we're going to end the conversation by going back, doing what we said in the very beginning. From everything that you've heard, today, would you be interested in lending on this property or one of our upcoming deals? And from there, you'll get a yes, you'll get a no, you'll get a maybe, or maybe you'll just get some more questions that you can answer, very simply. One question I used to get a lot as a new investor was, well, yeah, this sounds great. I'm definitely interested. But, instead of just me loaning the money, can I partner with you on the deal? Can we do a joint venture together? And I typically would say no to that. And joint venturing, a lot of times I meet new investors and I learned, I got the education, I learned what to do. I have a private lender that's going to fund the whole entire deal. We're going to go 50-50. And, talking about that like it's a good thing, and it's better than nothing. But joint venturing is a very expensive form of capital. If you have a private lender, you're just paying 10% of what they loan you, versus a partner that's taking 50% of all the profit. You really are better off over here. There always is a time and place for partnerships. I'm not anti partnerships, but how I would overcome that objection, I would just say, especially if this is the first time this lender is loaning on any of my stuff, I would say, partnership wouldn't be an option for me right now, on the deal. And here's why. Is, really one of my goals is to put myself in the position that you're in right now, being the bank to this deal. And because, over the course of the next 6 months, I'm going to have about, 40 hours a week invested into managing this project, marketing this deal, all of these things. You're going to have, maybe 2 hours invested over the next 6 months. And most of that time is going to be cashing the checks I send you on a monthly basis. So really, like on a per hour basis, you're making a lot more than I am, on this deal. So let's just start this way, and if we enjoy working together, maybe we could look at partnering on a future deal and just leave it at that. Unless you want a partner, unless they add something to the deal that you just don't have yourself, something like that. Maybe they ask you, can I get a higher interest rate than what you're offering? Maybe, I would just say no. I really believe in setting your program and then standing firm in what if you make exceptions, then you're going to get into negotiating. But a 10% rate of return right now for the average person is very appealing and very attractive, especially when it's backed and secured by real estate. So those are my thoughts. I literally just, this episode was kind of just looking at notes on my computer from one of the last presentations I gave to raise money, in my business. And those are the boxes that I check. That's what I go through. Like I said, I like to have a PowerPoint or a keynote prepared, so they're seeing visuals. And so I never also have to remember what to say. I've been doing this a long time, so it's kind of ingrained in me now. But you always want to have that, that guide to walk you through. And let me give you the close with this final tip. Is, at our live seminars, I'll always give people a tip for new investors. I'll say, if you've never done this before, once you get your presentation together, approach a family member or a friend that has money, but maybe you're a little intimidated to ask them, or whatever it may be, and just say, hey, I respect your opinion. You're a good friend. As you know, I'm starting a real estate investment company. I'm at the point where I'm starting to raise funding for the deals, and I put together a presentation. And I would love you to role play with me, pretend you're a potential lender, and just give me some tips and advice on how I can make this thing better. And I've said this year over year to our students. And every time I go to a live event, I always do, Jeff, I did that to my uncle and he's investing in my deal now, or she's investing in my deal right now. Because when you lay this thing out properly, it is very attractive for people out there that are looking to grow their money. So that is this week's episode. Leave me some questions. Leave me some comments. Maybe just some things I didn't hit on that you want to hear more about in the future, or maybe different objections that have been getting thrown at you that you want tips. I think that'd be a good episode to do in the upcoming weeks. I'll talk with JD about it, but how to overcome, the top objections, real estate investors will face, when it comes to raising money, or maybe any other area of the business. But I appreciate you guys. Continue to follow us, continue to share, this program. We're looking to reach as many people across the nation with this incredible financial education. So God bless you guys. Have a great week. See you next week on the Fortune Builders Real Estate Investing Show.